Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Friday, March 18th. Congratulations on making it through another volatile week in these markets. We've got a couple headlines to hit, also some technical levels being pressed up against here, so we'll touch on that and a few more things before we get started. CJ, how are you doing today, my friend?
Doing well, Monty. Excited to get into some charts and price action. Also going to talk about potential altcoin season, go over a couple of metrics that I think you guys will find interesting. But excited to get into it. How you doing, my friend?
Yeah, doing well, doing well. Glad it's Friday. Could use a weekend to chill. Lots of headlines, hitting the market this week. So figured we could start with that. And one that, has people a little bit upset. Some news that broke last night. Let's dive into that headline. Is regarding U.S. lawmakers and their plans to introduce bills that could force crypto exchanges to cut ties with Russian wallets. So last week we had Senator Elizabeth Warren coming out talking about her plan to introduce a bill about enforcing crypto regulations and basically dictating the rules for which U.S.-based exchanges can operate. And Brad Sherman is coming forward pretty vocally talking about how he thinks that the Biden administration should have the ability to tell crypto exchanges not to do business with Russian-based crypto wallets, obviously amid the situation with Ukraine. And, obviously on a single instance basis, like this could potentially be the right thing to do. But this brought out many people saying that this is, a possible slippery slope. It's counterintuitive to the principles of crypto, and that ultimately this could be detrimental to, the privacy and inclusion that crypto is meant to bring. So there was a lot of backlash to this bill, but, part of it came on the back of this from a Ukrainian government official, Fedorov. He requested that all major exchanges block addresses of Russian users. It's crucial to freeze not only the addresses linked to Russian and Belarusian politics, but also to sabotage ordinary users. So, pretty drastic measures sought by U.S. lawmakers and Ukrainian lawmakers. But this is being pushed back hard by the crypto community. But what's pretty interesting is that, already with this bill kind of looming overhead, it's bringing in, some proactive measures by various U.S.-based companies to prevent themselves being, hit with heavy sanctions following this bill. And one of them is Wasabi Wallet. Wasabi Wallet is a privacy-based or privacy-focused wallet, and one of their main features is the ability to coin join. So, we always talk about how Bitcoin is transparent, logged on the ledger. You can see all the transactions. Well, with Wasabi, you can kind of, obfuscate that. You can join your transactions into a pool of transactions. So the coins that you started with are actually different than the coins that you came out with. It really is kind of like, a way to launder your, Bitcoin, but it is, it does have use cases that aren't, malicious. It is, privacy focused for people that, need to conduct transactions privately, that sort of thing. But they came out in a tweet saying that they will start blocking certain outputs, UTXOs, from joining their CoinJoin. So, this is clearly a proactive step from Wasabi Wallet to, kind of get ahead of this possible crypto bill. But again, this is being pushed back hard by members of the crypto community. It is very counterintuitive to the principles that make crypto what it is. And, because of that's being met with heavy backlash. So, some FUD here, hitting the headlines as we wrap up the week, but ultimately it's not really doing all that much to price.
Speaking of which, why don't we get into it? So let's take a look at traditional markets because we kind of haven't for a while here. And the S&P is at an important place. Right, we are now retesting like the midpoints of this interim range in which we were rejected previously, and that area has formed a support. It's just a very strong level here overall at about 4,400. If we can break through and move to the next potential range, who knows? Potentially we see risk on behavior in a lot of other markets, but either way, we're coming up against some very strong resistance. And a lot of these charts look very similar. If you were even shorting down these levels, I think using these TD sequential nines or just the DeMark indicator to know when to take profit on your shorts, or even buy along, if you really wanted to do that, you could have basically executing on some of these indicators. Nasdaq, very similar place. We're coming up against really strong previous support, now potentially resistance levels. So it's going to be very interesting to see how price reacts after having 3 days or 4 days really of very bullish price action and risk on market environments overall. Also, when we look at treasury yields, we can see that they're coming down just a little bit after reaching that sell 9, like many of the others we've talked about that have occurred over the past couple months. Typically, we get a couple days of negative price action following that. So it looks like we might come down to roughly 2 or 205, roughly. Anyways, let's get to Bitcoin because we are in somewhat of a precarious state here. We have not been able to create a higher high, which is, it's just boring, really. I do think the trend is still pretty neutral, if not even a little bit bullish, but due to the fact that we're still creating higher lows. But we're looking at the third consecutive lower high. If we cannot get back above this 41 level, which has been really strong, really this entire channel between 41 to 45 is critical for the bulls. Until we really get past that, I have to remain a little bit skeptical on the trend, even though we are seeing some very macro bullish construction. And I think there's an interesting argument to be made about why we actually are going to have like very bullish price action and go risk on. And that's where I want to transition to the next topic, which is the altcoin season index. And so basically what this particular metric does, it's a way of visualizing Bitcoin dominance, essentially, because you're looking at how altcoins have performed relative to Bitcoin over the past 90 days. So you take the top 50 and you take the percent of what's been outperforming and what's been underperforming and then plot it on a chart. And so over time, the results that you can see are quite astounding. When we get very overbought, or at least what would look like overbought, and technically, the top of an altcoin season, take a look when that occurred. That was like very near the top all throughout April and May. Basically the top of 2021, then we came all the way down to oversold territory, and we bottomed very low here, basically around August, right when Bitcoin started to come up and the alts started to rebound and make that second leg higher up to 67,000. And, we topped out there as well. That was the last particular sign of, a relative top. And so look where we are now. Doesn't mean we can't go lower to these, levels seen previously, but I think it's important to note that we are very oversold relative to the risk on versus risk off type mentality in the market. People are still very risk off. And, unless things are truly detrimental, typically we stay within this reasonable range and snap back to the middle. So something to take into account. Also, the ETH BTC pair has been making some higher lows, which is definitely good for that whole type of mentality, but very interesting metric.
Yeah, really interesting stuff, CJ. And that sort of analysis of the crypto market is so important. People always ask us, how do you determine your portfolio allocations? And I think that looking to things like that and looking to Bitcoin dominance are key to maximizing your gains during these various market cycles. But just to tie that in with something interesting, I think that just looking at that chart, the one thing that changes from Bitcoin season to altcoin season is who's participating in this market. And you talked about risk on and versus risk off. That definitely is another way to look at it as well. But when we're in this kind of Bitcoin season or what we're seeing now, it's typically price action where we're making lows. Bitcoin is being accumulated by long-term holders. There's not too much retail participation, which is also what we're seeing right now. Low network transaction, low network activity. That tells us that retail participation is low right now. So we'll keep an eye on that. Keep an eye for the imminent altcoin season because it does always come eventually. The retail crowd comes back, those altcoins pump, but it just seems like for now we need Bitcoin to start to show some momentum before those alts are ready to run.
Well said. Well, unless you got something else you'd like to share, that's all I got for today.
Yeah, that's all I got as well. Happy Friday, everyone. As always, we'll be doing our members only Doge of the day right after this. But beyond that, hope you guys have a wonderful weekend and we will see you again on Monday. So take care.